Hello, everybody. Welcome back to the Real Estate Talk Show, your source for all things real estate. Now, there's a lot going on in the economy, and of course, you have lots of questions. So we brought in the expert to be able to answer a lot of those, and he certainly knows what he's talking about. This is Justin Rosello. He's the VP of Lending for Mortgages at Real Wealth Group. Loads of experience, certainly in the marketplace, knows what's going on. So we're going to talk further about that. So first, we're going to talk about the drop in interest rates. So, of course, Justin, welcome to the program.
Thanks for having me.
What's going on?
Well, a lot's been going on. As you know, Bank of Canada has dropped the rate by 0.75.
Now, Justin, do you think that that is the first step of another, just because of what's going on in terms of the economy? I mean, because we've had all the economists come on at the end of 2014, predicating that, of course, by the second quarter, we're going to see rise in interest rates. And of course, that is not happening. We are seeing a decrease. Now, the banks have yet to follow suit and make those decisions, but that's inevitable.
Right, absolutely.
Okay.
Some of the banks have dropped their rate by 0.15.
Okay, so they followed suit?
They followed suit. Not everyone has followed suit as of yet.
Okay.
So prime right now for some lenders is 2.85.
All right, which is unbelievable.
Yeah.
So what's happening then, Justin? So, there's a lot going on, but maybe you can help explain so everybody understands that this is just not a number that's just picked out of a hat here. There's a lot going on to make this happen. And why does the Bank of Canada do this?
Well, number one, it was the oil prices. It was oil prices decreasing.
Okay.
That along with the recent news of the unemployment rate in Canada.
Which the projections were supposed to be far better than they came out.
Correct.
Yeah.
Correct.
Okay.
So it's mainly happening on the East Coast and the West. The only ones that haven't been affected, it looks like, is BC and Ontario.
Okay.
Yeah.
Right. So when you put those together, you have a recipe for what we call a slowdown. So Bank of Canada is now trying to ease off the stress and reduce those rates to encourage what?
Spending.
Okay.
Spending.
So it's all about making us continue to spend.
Correct.
So knowing this, how do you guide your clientele? Because there's a risk there, though, right? I mean, it's a great time to get in the market. It's a great time to buy, and we'll talk about that. But also, you have to be careful, though.
Absolutely. There was studies out there that Canadians are overspending, like $1.36 they're spending, they're making $1. So with a drop in interest rate, it's encouraging more borrowers to lend against their property.
Because it's cheap.
It is cheap.
It's record cheap.
It's record cheap.
And it's pretty enticing.
Absolutely.
Now, we can go the flip side and say, well, there's no better time to get in the real estate market. I mean, when you have mortgages that you can capitalize on at incredible rates. I mean, we used to talk shop around. But now when we say shop around, I mean, really, they're at historical lows. So it's a great time to get in the marketplace, but only if you can afford to do so.
Absolutely. There are talks about the government restricting some of the more guidelines, mortgage guidelines that they have in place, tightening them up a little bit more.
Okay.
This will benefit the individuals that currently have mortgages, specifically individuals that have mortgages having a variable rate mortgage. For individuals looking to get into the market. But the banks, they're making it a little bit more tighter in terms of qualifying.
Right.
So the qualifying rate is out there. The qualifying rate for Bank of Canada is 4.79. If you are to if you do decide to get a mortgage, and you do choose a 1 through 4 fixed rate term, you will have to qualify for the 4.79 qualifying rate,
right.
As well as variable. If you're looking for a variable rate mortgage, it's 4.79. If you choose a 5-year fixed rate, you would qualify under the contract rate. So that's how the banks want you to stay in a little bit longer.
Very good. Now, Justin, a lot of people, of course, even at the end of 2014, they were contemplating with the presumption that this hike in the interest rate was inevitable.
Right.
So there was a lot of calls to, of course, lock in. So anybody that was on a variable rate, of course, they jumped and said, oh, you know what, I'm going to lock it in.
Sure.
But it's not necessary. I mean, that's something you can do within a day. You can make that call,
Absolutely.
But people, of course, want to prepare. And I fully understand that. You don't want to be caught, where you're unnecessarily paying a rate where it's like a sore, right? You just feel bad about it for a long time until it heals. Yeah. So right now, are you advising your clientele that they should lock it in or just hold on to that variable if you have one right now?
If you have a variable right now, I would hold on to that variable.
Okay.
For at least a year or two.
Very good.
If you're looking to jump into the market right now, the bond rates have dropped, i.e. the fixed rates have dropped. All the rates have dropped 1 through 5. So we're looking at rates. 3-year rates are hovering around the 2.5% range.
Okay.
5-year, not too much higher. 2.7, 2.8. So if you're looking at it at a discount rate, if you're getting prime less a half, today it's 2.5. Tomorrow it might be a little bit less when they drop the rate, and you want to compare it to a fixed rate. The fixed rate might not be a bad option. Sure, it's a little bit higher, but it might be a half a point higher, maybe less.
For that peace of mind for the next, 5 to 7, depending on what you choose.
3, 5, 7 years, yeah.
All right, very good. Now, we're not going to just talk about interest rates because there's more to a mortgage. I mean, there's a term component. There's lots of aspects to a mortgage. And we're going to talk a little bit more about private mortgage investing, okay, when we come back. So we're just going to take a short break, come back with Justin in a moment. So everybody just remember, if you have any questions and you might have something directly for Justin Rosello, please make sure that you reach out to us. Of course, you can contact us via our website. That's realestatetalkshow.ca, or you can call our help desk anytime. That's at 1-844-ASK-RETS. That's 1-844-ASK-RETS. We'll be right back with Justin. Don't go away.